All major exit polls project a resounding victory for the Bharatiya Janata Party-led National Democratic Alliance in the 2024 Lok Sabha elections. The BJP itself is expected to better its 2019 tally of 303 seats and together with its allies may even come close to realizing its call of Ab Ki Baar 400 Par. The GIFT Nifty is also indicating a massive 600-point gap up as the market looks to cheer this potential verdict. India's GDP grows at a faster than expected 8.2% in FY24. Gross value added growth, which excludes subsidies and taxes, comes at 7.2%. Manufacturing sector growth almost touches 10%. Fiscal deficit in FY24 also springs a pleasant surprise. The deficit stands at 5.6%, which is lower than the 5.8% estimated by the government in the last budget. Net tax receipts are also higher than the budgeted estimates. The Dow Jones sees its best day of 2024, but the S&P 500 and Nasdaq snap a 5-week gaining streak. The Fed's preferred inflation gauge, the core personal expenditures index, rises in line with expectations at 0.2%. Stocks in the Asia-Pacific are trading largely higher ahead of key manufacturing data from China. The Korean Kospi, the Japanese Nikkei and the Taiwanese index, along with the Seng, surged nearly 1.5%. And crude prices closed with their worst month since November, with Brent falling over 7% in May to about $81 a barrel. The OPEC Plus also extends its production cuts in a meeting over the weekend, with some rollbacks expected in October. Gold prices remain range-bound around $23.50 an ounce. And with the GIFT Nifty's anything to go by, it promises to be an action-packed start to an action-packed week. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Centre. I am Hormus Patakia. Let's get to the big story from the weekend. All major exit polls, including the News 18 poll, are projecting a resounding victory for the Bharatiya Janata Party-led National Democratic Alliance in the 2024 Lok Sabha elections that concluded on Saturday. According to projections, the BJP itself is expected to better its 2019 tally of 303 seats and together with its allies may even come close to realizing its call of Ab Ki Baar 400 Par. Parikshit Luthra is now here to get us the key takeaways from the News 18 exit poll.
We bring you the findings of a News 18 exit poll conducted across the country. Here is the methodology first. We have covered 518 out of the 543 Lok Sabha seats. 21 states were covered by the News 18 Poll Hub, which conducted this exit poll. The data we got from the voters was cross-verified with phone conversations, and after all of this, we are bringing you the findings of our exit poll. Yes, the big numbers from Uttar Pradesh for all the seats. The NDA, led by the BJP, expected to win 68 to 71 seats. The India Alliance expected to win 9 to 12. Let's also tell you about Maharashtra, where we have a total of 48 seats. The NDA Alliance is projected to win 32 to 38 seats. The Opposition Alliance is projected to win 15 to 18 seats. Remember, this was a state where there was a lot of complications in terms of the politics and political parties. In West Bengal, the NDA is projected to win 21 to 24 seats. The Trinamool is expected to win 18 to 21. Let's talk about Bihar. The NDA projected to win 31 to 34 seats and the India Alliance projected to win 6 to 9 seats. Let's also speak about the South Zone, which has 131 seats altogether. The Opposition Alliance is ahead and is projected to win 64 to 67 seats. But the BJP is gaining ground. The NDA is projected to win 51 to 54 seats and others are projected to win 14 to 17 seats. Here is the big all-India projection for 543 Lok Sabha seats. Here is how the numbers stack up. NDA projected to get 355 to 370 seats. India Alliance to get 125 to 140 seats. Let's see how things pan out on the 4th of June. Here is the verdict from other exit polls now. News 18 exit poll, 355 to 370 for the NDA. India Alliance, 125 to 140. Other parties, 42 to 52. India TV CNX poll, NDA 371 to 401, so they're giving 400 plus to the NDA. India bloc 109 to 139, other parties 28 to 38. Dainik Bhaskar poll, NDA 285 to 350, India bloc 145 to 201, others 33 to 49. India News D Dynamics poll. NDA 371, India Bloc 125, others 47. Jan Ki Baat, NDA 353 to 392, India Bloc 141 to 151, others 10 to 20. Republic Matrice, NDA 353 to 368, India Bloc 118 to 133, others 43 to 48. Republic P Mark poll, NDA 359, India Bloc 154, others 30. Today's Chanakya seat projection, NDA 400, India 107, others 36. So clearly, all the polls showing a big majority for the NDA, a thumping victory for the Prime Minister, the BJP, and some polls even going across to say it could be 400 and 400 plus, as was the target set out by the NDA before this election actually began. So let's see how things now pan out on the 4th of June when the actual counting happens.
Parikshit, thanks a lot for that update from the exit polls, and the markets are definitely seem to be cheering what the exit polls are projecting. Let us now listen into what market veterans Ramdev Agrawal and Prashant Khemka had to say on the exit polls and the impact that it would have on the markets today.
As far as the market is concerned, I think we are done with it looks that it is almost in the bag that the current government comes with resounding victory, and the current policies will continue. All the short sellers, they will be completely squeezed because they have only two choices, either to square up tomorrow or they have to wait for hoping that real results are not as good as what the exit polls are saying. So you can wait it out for the Tuesday. But my sense is they'll panic and they'll come tomorrow. They'll come to cover their positions, and hence domestics in any case they were buying. My sense is that tomorrow market should be quite firm and may open 3-4% higher, something like that.
Results are very much as the market would have hoped for, and there was some apprehension over the last few days, and hence last week the market was down 2%. So my expectation is that we'll see major buying, very large magnitude of buying from FIIs in the coming days. I've seen a lot of them. Obviously, the interest level has been rising over the last 2-3 years. Many have invested, many have moved from China to India. But yet there's a very large number who, over the last few months, wanted to wait for the outcome of the elections to be out of the way. And those would start now actioning their analysis. So they've been in the analysis mode. And they've done their analysis and they've waited for this event. And now we should see them put their money to work.
Ramdev Agrawal and Prashant Khemka there with their analysis. Now we have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the F&O cues for this morning. Vivek is now first up with the market cues that you need to watch out for today. Vivek, good morning. I guess no other cue would matter today considering the exit poll outcome.
Good morning, Hormal. It appears to be a Monday morning where we probably see the markets touch record opening high itself. Now, the kind of indication that GIFT Nifty is indicating, implies that we are going to see a very, very strong start for our own markets. It will be important to see whether that particular short covering sustains, and we see further upside after market opens as well. What are the most important cues, that have happened overnight, and also what are the cues that happened as far as last week was concerned? Remember, last week market was extremely nervous regarding what will be the outcome of the exit poll, outcome of the actual poll results as well. So last week, India was a significant underperformer, mainline indices as well as the main benchmarks as well as the broader end of the markets. All of them slipped almost to 2.5%. Now, what are the top key points that have transpired? Number one, like you mentioned, exit polls are indicating a comfortable majority. Number two, Friday evening, Q1 at 24 GDP, the print came in at 7.8% year-on-year growth, which is significantly above what the market participants were anticipating. Apart from that, last week, remember, S&P also revised India's outlook to a positive stance from the stable that they had earlier. Along with that, what's very important, IMD has predicted above normal rainfall as far as its updated long-run forecast is concerned. Week on week, Nifty was down almost 2%. And also, one positive cue on Friday was the fact that we saw a little over $2 billion of inflows coming in from MSCI-led rebalancing as well. That was also aided the flows as far as Friday's trade was concerned. Global handover was very positive. Brent futures and oil prices slipped almost 7% in the week gone by. Overall, very positive start.
Very positive start indeed. Thanks a lot, Vivek, for all that update. And now let's get over to Abhishek, who's joining in with the stocks that you need to watch out for today. Abhishek, good morning.
Good morning, Omar. So to begin with, Canada Bank, they will look to dilute 14.5% in their life insurance subsidiary via an IPO. REC to raise about 1.45 lakh crore of bonds. That will be in one tranches or even more. M&M, their sales have come out. It's grown at 16.7% YOY and it's beaten analyst estimate as well. Coal India business update, May production is up 7.5% YOY. Even if you take a look at Scott's Kubutka, the sales are actually down 6.1% YOY, but they are above analyst estimate over there. In terms of SML Isuzu, the sales are up 21.2% YOY. TVS Motor, the sales are up 12% YOY. This is again TVS Motor has beaten analyst estimates as well. Hyundai Motor, the total sales is at 63,551 crore for the month of May 2024. In terms of Atul Auto, the total sales is at 4,023 units versus 1,816 units that they had in the same time last year. And take a look at Maruti Suzuki, the total sales are down 2% on a YOY basis, and this is below the poll or below analyst estimate as well. Back to you.
Abhishek, thanks a lot for that. And lastly, move over to Mangalam now, who's joining in with cues from the FNO space. I guess the only two words that dominate today, Mangalam, is a record high.
Record high indeed. You don't need me to tell you that, Hormaz. You have Gift Nifty that's telling you that's a near 700-point uptick. Don't remember the last time we saw a near 700-point uptick for our markets at the open itself. And we've spoken about the triggers for the rally itself. And, in descending order of importance, we have the exit poll data that has come by. The earlier record high of 23,111 will be taken out. That's just a matter of, opening for the market. Exit poll is the first one. The second one, macro is doing extremely well. And thirdly, don't lose sight of what's taking place in the globe as well. The US data also wasn't as bad as the street was anticipating, or much worse than what the street was anticipating. So as a result of which we saw good moves out there as well. The exit poll move, the market was sussing out already. Why do I say that? Because second half of trade on Friday, look at the group of stocks that rallied. We had the Adani group, all of them rallying anywhere between 7 to 11%. And that told you maybe some part of the street is positioning itself for that itself. Add to that, the MSCI flows led to a big cash purchase from both FIIs and DIIs in the market. However, with this up move that we're seeing, what's interesting is that the FIIs continue to sell in index futures once again. So the FIIs sold about 1,000 crores. They added about 31,000 shorts. The question is, what happens to those shorts once the market opens 700 points higher? Why do I say that? Because, they started the series with record shorts of almost 3 lakh contracts. That increased all the way up to 3.2 lakh contracts. And with the market moving higher, we're likely to see some of these shorts cover their positions, or maybe some of them also carry on for the next day. So the key to track today will be, after the record high, do we see some profit taking ahead of actual election results tomorrow? If the options data is something to go by, there was a lot of punt buying at options 1,000 points away from now. 23,500 call, extremely active for a premium of 110. So maybe around 23,600, we see a wee bit of profit taking. But that's just about today. If the trend continues, then maybe we are in for a big bull run in this month.
Big bull run for this month indeed. Mangalam, thanks a lot for that. Time for a short break now on Power Breakfast. Up next, we get you details on the other big trigger for the market, the FY24 GDP and the fiscal deficit reading. Stay tuned. Back on the other side. Welcome back. Now, India's GDP growth for FY24 came in way above expectations at 8.2% compared to the CNBC TV18 poll of 7.8%. The Q4 tally at 7.8% was also above the CNBC TV18 and other poll figures. Lata Venkatesh is back with us. Good morning, Lata. Just one part of the multitude of good news that we have this morning.
Oh, absolutely. The GDP numbers, both full year and fourth quarter, were above estimates, and how? A good 50 to 70 basis points above estimates. Now, let me just tell you what's worked very well. Manufacturing was quite clearly the best performer, rising 9.9% versus a minus 2.2. Mining obviously has done extremely well, 7.1. And financial, among the services sector, financial services has done the best. 8.4 over and above an already strong 9.1. If you looked at GDP from the demand side, then it was investment, what you call gross fixed capital formation, up 9% over and above a strong 6.6. What didn't work? most of the employment-heavy sectors haven't done well. Agriculture, livestock, fishery, that sector has grown only 1.4. Trade, hotels, transport, the big part of services, very employment-heavy, is 6.4, much lower than the overall GDP. And from the demand side, private consumption has grown only by 4%. So, what would you say in terms of key takeaways? While the GDP growth is stunning, you must remember that GVA, gross value added, has grown by only 7.2. Now, what's the difference? The NSO actually calculates the GVA, how much value was added, and to it adds indirect taxes and subtracts subsidies. This time, there was hardly any subsidy payment. In fact, all of this year. That's why the GDP is very big. But GVA is 7.2, and that's the real number we should go by. The GDP is a bit of an outlier this year because of peculiar issues. Let me come to the positives. The big positive is that even 7.2 is a damn good GVA number, and it's happened despite the fiscal deficit coming down very sharply. Numbers indicated that in FY24, the government gave stimulus a full 1 trillion less. In spite of it, growth is good. The worry is, can GDP keep on growing when consumption and employment-heavy sectors are not doing well? Ultimately, the capex cycle will continue only if there is consumption. That's a worry. Not many people have increased their GDP forecast for FY25. Kotak Bank has increased it by 30 basis. Goldman has increased by about 20 basis points. But SBI, MK, UBS are all at the same level because they were already high numbers, is what the economists told us. So today, like the exit poll trigger, the GDP trigger will also be for manufacturing and construction stocks, the stocks that have done very well.
Lata, thanks a lot for that update. And as Lata was mentioning, it's not just the GDP data. The government's fiscal deficit data also sprung a pleasant surprise. The net tax receipts were above the government's revised estimates. Sapna Das is here with the details.
Well, it's a complete southward journey as far as the government's fiscal data is concerned, and the bettering of the fiscal deficit, there are a couple of reasons, very clear reasons over here. The revenue receipts have done extremely well in the previous financial year. Revenue receipts, 100% of the target has been met, in fact, slightly more than 100%. And both taxes as well as non-taxes have done extremely well. Particularly in taxes, income tax, personal income tax has done very well. It has clocked over 10 lakh crore worth of revenues for the government, so that needs to be watched out for. Even in terms of your disinvestment, along with the PSU dividends, more or less that aim has been met. Plus, if you look at the government's expenditure budget of the previous financial year, it was close to 45 lakh odd crores. There could be a 1% saving on that front, so that would have translated into something like 45,000 crores worth of comfort to the government. So all of this put together has given them this good number of 5.63%. Now the question arises that, after the RBI dividend has come in, there is now an expectation, and plus with this compression that has happened, that maybe they will like to reduce the fiscal deficit number further in the coming July budget. Will that happen? Well, there could be room for that, but that's something we'll have to wait and watch and see. However, expectations are running high that the government would like to, reduce the deficit number further in the budget.
Sapna, thanks a lot for that. Time for another short break on Power Breakfast. Up next, we get you the global market setup on the other side. Stay tuned. We'll be right back. Back with us on Power Breakfast, and let's now take a look at how the Asian markets are faring. It's a very positive start across the Asia Pacific as well. The Hang Seng is up 2.5%, and that is leading the gains after underperforming all through last week. The Taiwanese index is also up 1.5%. The Nikkei and the Kospi, both the indices in Japan and South Korea, both trading with gains of over 1%. China, some macro data emerging from China. The manufacturing growth in the country surged to the highest level in 2 years in the month of May. So positive cues coming in from China, and of course pull up the GIFT Nifty, and that is indicating a record opening now 800 points higher on the GIFT Nifty as we speak, almost near 23,500. So a very, very positive start for our own markets in the offing. Now on to Wall Street, where Friday's session came to an end on a mixed note. The Dow closed with a gain gains of nearly 600 points, while the S&P 500 closed with gains of 40 points. The Nasdaq ticked lower and ended flat, but all major indices ended the week lower, with the S&P 500 and the Nasdaq snapping a 5-week gaining streak. The Dow also reported a second straight week of losses. Inflation rose in line with the expectations in April, according to a measure released on Friday that is followed closely by the US Federal Reserve. CNBC Steve Leisman now joins in with the key highlights from the April inflation data.
It looks like personal income coming in at on target at 0.3% versus March, which was not revised down. I expected it would be, but came in at 0.5 as previously pointed out. Overall PCE price index at 0.3. That is spot on with the prior month and spot on with expectations. And the core, the key one here, coming in at 0.2%. Again, according to expectations. I told you that the economists have figured out how to do this and how to come up with a decent number relative to the actual number, and they are spot on. March not revised, 0.3%. Okay, year over year, price index 2.7, in line with the expectation, in line with the prior month at 2.7. The core, however, looks like it is a tick higher. I'm not sure if that's due to rounding, guys, but the core at 2.8% versus the prior. So no improvement in the core, no improvement in the year over year. I'm guessing, I can't calculate this on the fly, that maybe the 3-month annualized or 6-month annualized is a little bit better.
And as promised, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up on this record-breaking day?
Hey, oh, yeah, absolutely, Hormuz. There's just so much to watch out for, isn't it? I'll start with the China PMI data, which is expanded at the fastest pace in 2 years. You have South Korea manufacturing activity expanding at the highest in 3 years. And then, of course, as you said, investors are also focusing on the India markets on exit polls over the weekend. So it really is a strong support that we are seeing in commodities right now. So the crude oil prices declined 7% in the month of May, but have started the month of June on a very firm note. Also adding to the support in crude prices is the OPEC and allies extending voluntary cuts for 2.2 million barrels until September and 3.6 million barrels into 2025. Now, this clearly has led to buying into the markets. Also, support coming in because of the stronger Chinese data is in case of the metals. So whether it's copper, iron ore, aluminum, all trading in the positive and up by more than a percentage point. We also are looking at precious metal prices trading in the positive. So everywhere that you look in commodities, there is good gains.
Manisha, thanks a lot for that update there from the commodity space, and a lot of positive data coming out from Asia as well. But with that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes you through the start of this record-breaking day.